All right, stocks seem to shrug off what's going on in Washington, as has been the case mostly here lately, and probably for the best. It's probably teaching us a lesson that we should probably shrug off most of what's going on in Washington. But it's continuing a trend, so we're going to talk about how much longer this trend lasts, what it looks like, how whether it's maturing or not, how many legs higher it has left. Based on what the technical indicators are telling us, and what the risks are to the upside and to the downside. We're going to break down what pullbacks look like, what noise looks like, the difference between near-term pullbacks and intermediate pullbacks. We're going to break all that down in today's video. We're going to take a good look at the dollar and the move it's made and the move we kind of expect it might make here in the next few days, and how that leads to our expectations for this current intermediate run we're on. We're also going to take a look at yields, which had a leg lower today. Is that going to be more of a thing here, or was today the hiccup? So we're going to take a look at that, at the different asset classes, and take a look at an old familiar name for a trade idea that's been kind of underperforming that might outperform during the next couple legs higher. So let's go ahead and get started. Today is Wednesday, January the 13th, 2021. This is the Market Outlook from MarketScholars.com. My name is David Settle. All right, well, let's start off taking a look at the S&P 500 with the Market Forecast Indicator. You see that we've been trading in a range pretty much all week, at least the last 4 sessions, in the range of Friday's trading range. We've been up and down, really small ranges. We finished off of the high, which brought the momentum and near-term lines down. They were actually flirting with the upper reversal zone. We were flirting with the cluster there. Had we closed at the high or a little bit higher, probably would have had it broken through a new high, and we didn't quite get there. So as a result, we still have a strong posture. We still have strong long-term market sentiment. The trend is obviously still bullish. And remember, anything between 0 and 23% is just noise. A pullback doesn't start until you break that. And especially until you break the 30-day by a significant margin, 1.5% or more than 1.5%. And the nice thing is, like now the moving average is getting well into this kind of noise area, that by the time you did break the 23, you would be close to the 1.5% mark, depending upon where it closed, of course. So the near-term line did bounce. The momentum line still in the upper half of the chart. We did pull back the last couple of days here, but it stayed in the upper half of the chart. So we're now going on. Looks like this was below it on that day. So 1, 2, 3, 4, 5, 6 days. 7 to 12 is your normal run. So it looks like we're kind of getting to the end of a normal run, even with the momentum line jumping. It didn't jump. It jumped from an oversold level, that intermediate confirmation signal we talked about on Monday. So it jumped from that. And I talked about that we're probably going to jump from there to a new leg of this near-term rally. I don't expect a new near-term like 7 to 12 days to start from here, because the near-term line wasn't below 50 at the time. But we're still kind of in this leg of this near-term run and it hasn't ended. So you get lots of near-term pullbacks and where the blue line drops below 50 while you're between 0 and 23. Right, breaking the 23, now we're looking at an intermediate decline. Of course, like I said, we're not to that point yet. The Russell 2000 has gone up to higher highs here. So if I were to activate here, let me activate this and move this up. So there's where the market sentiment, and let me activate the intermediate retracement levels here. There we go. Based on the intermediate run, and you can see the near-term line, the Russell also came really, really close. It was down today as a lot of those kind of small cap areas in the market pulled back, like industrials and energy and materials. So it was down today, but not down enough to keep the near-term line from going up. So had we closed at the highest today, we would have had a cluster on the Russell 2000. It came very close to a cluster yesterday. Only the near-term line was at the 78th percentile there, 78.7. And not quite above 80. So close, but no cigar. And that would have been, like, again, we've been on this near-term run now since the beginning of October, or intermediate run, excuse me. So we're looking at, more than 3 months now, going on 4 months of the Russell 2000 being on this bullish run. We're definitely getting to a mature part of its rally. And finally, the NASDAQ 100, you can see, what it looks like here. It had that little pop up here early in the week on Monday. And it had a nice little bump up higher today, and that's pushed it up. Here, I think that blue line is the market sentiment pullback as well. So let me activate this one and bring it up to these highs. Again, you can see its moving average is also between the 0 and 23% level. We're not getting up above. That would be Friday's range. We're still kind of trading, so very similar to the S&P. The intermediate and market sentiment levels are still strongly bullish. We are bouncing up. The near-term line did pull back below 50, unlike the S&P, and we are bouncing up, so we might be getting another near-term leg starting here. Like I said, you get lots of near-term pullbacks inside of 23. You don't get the intermediate pullback where the intermediate line falls below 50 until we break that 23% level. And you can see the pullback here can go all the way through the retracement zone and still be above the 23% line of the long-term, the market sentiment rally, which would include both intermediate runs on this. So yes, the market sentiment line pulled back briefly there, but I still consider this one big market sentiment rally, as I hardly consider that a market sentiment pullback. That was barely an intermediate pullback as it was. All right, before we look at some other charts, I invite you to subscribe to our YouTube channel. Mouse over this icon here in the bottom right corner of your screen, hit the red subscribe button that pops out. There's also one down below the video if you're watching us on YouTube. That notifies you when our videos are posted. Also, while you're down there, comment. What did you get out of our video today? What stood out to you? What questions do you have? Post those in the comment section. Join our website at marketscholars.com. There's a link popping out there in the top right corner of your screen. Click on that link to subscribe to our site for free. Follow me on Twitter for more content in between the videos. My handle here at DavidSettle42, and join our Market Outlook Facebook group that we've created. I also forgot to mention, hit that thumbs up icon down below the video. That lets us know that you liked our video today. You want us to do another video again on tomorrow. Okay, so if you're watching here, check out our Market Outlook live video. Here I review all the old Market Outlook trades I've done in all my Market Outlook videos that we're still trading. I get asked about that a lot. So that's the video. That's the video I do. I do it every day. I do the Market Outlook. I do a live video at 3:30 Eastern time, and all we do is review trades. And we also put on today's trade idea. So before the market closes, instead of having to wait to watch this at night and put on the trade if you want to, the next day we actually put on the trade before the market closes in that video. And you can see all of our trading rooms over here on the right. Q&A sessions are for our premium subscribers, but our plus subscribers get access to the Market Outlook lives as well as all the trading rooms. We do 8 a week, 8 different trading rooms a week, and then the 2 Q&A sessions on top of that for our premium subscribers, as well as all of our premium tools, including our charts. You can see that we've been updating. We're in the process of updating here. Come down here, hit this heart. It opens up a new tab. Hit that like button right there. Hit this thumbs up icon. Also opens up a new tab. Hit that like button there. Again, the more you do that, the more people will see our content. More of our followers will see our content because of how their algorithms work. The more likes and engagements it has, the more Twitter and Facebook will show our content to all of our followers. It also benefits you because they will show content in your timelines from the accounts that you engage with the most. So we try to make it really easy for you to engage with us right here. All right, now let's take a look at the long-term chart, and you can see the S&P is looking very bullish. I mean, about as high of a PPO as we could possibly have right now, up here at over 8.25%, 8.31. So that's a very, very high PPO for the S&P 500, which is not, obviously some other indexes like the NASDAQ will have a higher beta, but it's the highest that we've seen in 20 years. For the PPO to be that high. We are getting a bullish candle this week, though we're not getting a higher high yet. That would be like the third thing, but we are getting a higher close and no lower shadow. It's been our 1, 2, 3, 4, 5, 6, 7, 8, 9, 10th week in a row since this rally of good bullish candles. And at that point, we were already above 5% when we started this run. So pretty decent run considering how bullish we already are, which again, considering that as shallow as an intermediate pullback as that was, and then the rally we've had since, this is how big the intermediate pullback can be the next time, which would be a much bigger move on a relative basis than what we saw here. getting down to 34.47. That would be painful for some people that have been getting bullish in this area, and it wouldn't be anything more than just an intermediate pullback. So that's the problem when we move up so much and we don't get a good enough exhale here before we rally again. We go up further and it opens up the door. I mean, again, 0 to 23 on this market sentiment, that's a big window for us to trade in and still be considered noise on a long-term basis, which on an intermediate pullback would just be noise on a long-term basis. Take a look at some of these other charts, like the 3 green arrow chart on the S&P. We're back to 3 green arrows. Obviously, the stochastics is very strongly bullish. You look at the 2-line versions, you can see the MACD is rolling over and the stochastics is slowing down. Its gap between its lines here is slowing down, even though it's very high on a level, but we're just getting very little momentum, and the momentum is waning. So that's something to keep an eye on too. You look at it, it's like RSI and the CCI. They're still in bullish territories, so we're not, we're not poised to kind of get any kind of significant decline in the next day or two. We are diverging, so the common theme here is that we're just kind of running out of gas, so to speak. We are still moving high enough, and we're still the trend is still strong, and we're still in the upper quartile of Bollinger bandwidth. We're still above the value area. We're above that support volume node that's above the value area. The trend strength is still very strong, and it takes a lot to at the break. So we're not poised to break it anytime soon, like in the next day or two. But we are, as we see what the downside risk is, considering how we've been so strongly bullish on a lot of these indicators, and they are running out of gas, it limits what kind of upside we've had. And we've seen that here in the past week. As bullish as we are right now, we're just not moving very much, and I don't expect us to move very much to the upside. We can still go up, and I still expect we probably will go up because we got a strong trend going, but we won't go up nearly as much anymore. And like I said, the downside, just even before an intermediate pullback starts, the downside's about 200 points there, about 5% before, like I said, even an intermediate pullback starts. And of course, coming down here where you're more likely to come down to 34.60, now you're looking at about a 400 point drop, that a 10% move roughly. So it kind of gives you an idea of what kind of scale an exhale would look like. It would look, again, on a relative basis, a lot deeper than what we saw over here, even if it's not as big on an absolute basis. So on the intraday chart, that 23% level would actually be right. In fact, let me activate this and let me bring it up to that high point here. So this level, that 23% level, is right at that node. So this node where we're at right now, and the point of control for the 4 weeks, as well as the midpoint of the 4-week range, is right down there at 371. That is an area that we can get to in the next day or two. There is no volume between where we're at here because we moved up so fast here. We can fill in that gap as easy as we moved up. We can just as easy go down if we break that node. So just kind of keep an eye on that tomorrow into the weekend, if not immediately after expiration. But I even think, considering how big the node is now and how big that gap is, even before this expiration, there's a good chance that we can fill in that node there, or that gap, that volume gap. If you take a look at today's volume and the trading range, you can see the volume is really tapering off significantly. And you saw the volume today, the range today is just 3 points. So the range and the volume here are both really tapering off and getting kind of complacent. And we see that in the VIX too. The VIX still above 20, but it's down from where it was before or earlier in the week, and we are at that kind of at the low point of this current range for volatility since we bottomed out on Halloween. So that this current intermediate rally, this seems to be the low right now for volatility. So we're kind of setting up for that type of volatility bounce. So you can see, after getting a range of under 3 points there, and we got a range of just over 3 points here, the volatility, we're kind of coiling again for this type of move where we get that 1 or 2 weeks where we can pop up here, or whenever that ends up being. And again, for an intermediate decline, for an intermediate run to start, we have to get up to that 105% level. And we haven't done that. I mean, that was at the end of this last intermediate run. It's about as close as we got to getting right there to the 105% mark, or excuse me, over here to the 105% mark, and that was it. Next time, this kind of move will actually be at the beginning of the intermediate decline, which is more normal. This is more atypical to start an intermediate run with a small pop and finish it with a bigger one. That's actually more typical of a long-term kind of bear market, market sentiment type move, not so much the short-term intermediate pullbacks. All right, so before we look at what's driving the market today, just to summarize the technical outlook, again, we still have this strong bullish trend. It is starting to lose momentum and wane. It doesn't mean that it's going to fall, that the intermediate pullback is going to start tomorrow, but there's a very good chance a smaller pullback, a smaller near-term type pullback can start tomorrow, because or Friday, or even right after expiration. But in the near term, because there's a big volume gap that's being created right below these levels we're at right now. We moved up so far about a week ago, so fast, and then have gone sideways since, that it's left a gap. It's left a pretty significant volume gap down to where there should be some very strong near-term support. So again, not calling for an intermediate pullback to begin anytime soon. But, the volatility is down at some lows. It's popped from here before. I think there will be one coming. And it won't be anything more than that. Right? It'll just be on a long-term basis. It'll be nothing but noise. But over a month or two, it will be, a period of volatility that will set us up for some good directional moves coming out of that eventually. But that's not going to start like that. Again, we might have another near-term run or two, like I said on Monday, another near-term run or two, and we haven't even finished the near-term run yet that we were on when I did the last market outlook. So I think that this near-term run is probably close to ending. Like I said, another near-term run or two we still have left before we completely run out of gas on this current intermediate run and have more of a decline. So we'll see what that catalyst ends up being. Barring a catalyst, we might have more near-term runs and have another one of those really long extended intermediate rallies. Of course, the longer it goes, because we didn't have very much of an exhale last time, as I showed you, the longer we go, the bigger the exhale will be, especially on a relative basis. So, for a lot of people, they're getting more bullish now than they have ever during the prior intermediate run last year. It's going to be pretty painful for them. Not so painful for most people, especially market scholars who follow what we do in our classes. But for a lot of people who have been loading up here lately, especially on some more of the speculative names, it can be pretty painful for them. So what do you think? Do you agree with that assessment? Do you disagree? Let me know in the comments section down below, especially if you disagree. Let me know what you're seeing, what charts or indicators you're using that tells you why you're either a lot more bullish than I am or a lot more bearish than I am. All right, let's take a look now at what's driving the price action here today. And let's take a look at this asset grid here. You can see, again, the 3-month returns. But let's just look at today alone. So bear with me 1 second while I bring that up. All right, you can see real estate and long-term bonds did really well today. So bond yields dropped, and that you'll see that have an impact in the sector rotation here today. But bonds were up. So, this is not too common to see bonds and the Qs up the most. But that's kind of your risk-off move right now because, your small caps dropped the most. The dollar was up, so that put pressure on yields actually, and it put pressure on gold. So gold and commodities all down. International stocks all underperformed the S&P, and the S&P was holding up thanks in large part to XLK and a lot of these big large cap tech names, which influenced to a bigger degree the S&P than some of these smaller areas. Let's take a look at the dollar. And how it looks like and what it did here today. And we'll look at it compared to the euro, since that makes up 60% by itself of the dollar index. You can see right now, there's the down day today. We're flirting with that 23% level. So the euro is flirting with starting a pullback, an intermediate pullback, which would be bullish for which bearish for the euro is bullish for the dollar. And that would be more likely, that would be more coincident with a broader risk-off pullback. So we might be seeing the beginnings of one, even though the Qs were up today and that helped the broader market stay up. but we saw small caps down. And during this next intermediate pullback, small caps are going to lose the most because they have the most to lose. They have the most gains over this particular run, and really for the last few months, they have the most gains to lose. So we are flirting with that 23% level. We've been down below it. We're not down below that moving average very far yet. Remember, that's kind of the second thing, is getting below the 23% and getting below the moving average so that you can get a red line where the moving average turns lower and you're below it, and you can stick, that red line can stick. So as of right now, that's still a very bullish pattern here. Light pink shading and a yellow line is a very bullish pattern. Now, eventually, light pink shading and yellow line will turn into something more, right? If you drop down too far below it, as you did, you can see over here, and you turn into a red line and dark pink shading. But as of right now, this can be a very bullish pattern. So can this bounce here lead to another week or two of near-term runs on the intermediate line? Can we get back up to this trend line here that we have broken below last week of this intermediate run? So that's kind of the question. The intermediate line has fallen below its market sentiment line because this market sentiment line has gotten to the upper reversal zone. If you take a look at yields, you can see they also had a turnaround. They've got significantly up above their moving average, and they're pulling back now. Again, just in the short term, they were just so far up above, it's kind of hard to maintain the pace of gain, the momentum, when the MACD, for example, is that high. So the histogram is rolling over. Again, we're just to the 8-day, and you've got to at least break the 17-day before you even start thinking about an intermediate pullback on yields in this case. This is what the TLT looks like, so the inverse. TLT is, again, bouncing up to the 8-day. The histogram is turning up. But again, before you can even think about getting a bullish run here coming off of this cluster from last week, we're still well below the moving average, much less, again, you get dark green shading the green line during these kind of broader intermediate pullbacks, and it doesn't look like we're anywhere close to that. I get asked about gold a lot because of the dollar. You can see the gold has pulled down to its 38%. There's some support here, light pink shading and yellow lines turn briefly dark pink. So it's kind of poised at this level where we can bounce to. Remember, the euro is also at a level where it can bounce. So again, we might bounce here just briefly, right? Just another near-term run or two, and risk appetite. Stocks go up, small caps maybe go up one last leg higher. The dollar falls, the gold rallies, commodities rally briefly. Here's commodities. So commodities, in fact, they're still kind of trending higher, close to an overbought cluster, but still trending higher. They haven't pulled back yet. So, they maintain their bullish trend and just keep going. So, there's an opportunity for us just to stay bullish here for a while. Here's the the trend strength indicators, how strong. Remember, these don't break. By the time we finally got to zero here, we had finally broken below the blue line there, and the trend had broken, but that was a pretty significant drop before the next day really gapping down, and then the trend was done. So it's not easy to break a really strong long-term trend. Lots of down days in there, but not down enough to break the trend. Even that little drop wasn't down enough to break the trend, and it's going to take a significant drop to break that trend because of how strongly bullish we are. Let's take a look at how the sectors are doing, and you can see same thing just looking at today. Remember, the bonds were down, so rates were up today, and that had an impact on sector rotation too, as utilities and real estate. Again, not your real risk-on type leaders. Those are your risk-off leaders. And so they rally here. Of course, energy, materials, industrials, they had the most to lose because they've gained the most recently. They're down the most, but not very much. So we're not talking like this is a significant pullback. Remember, on these here, we're not. You have to start off with a pretty significant decline to start an intermediate pullback, and obviously, this is what it looks like, and we're not there, right? We're not there. So the sectors are still relatively strong. When you look at their 12 grid here, the cyclical areas, they're the ones that had pulled back, especially communication services. They have some room to bounce now. Light green shade, yellow line, light pink shading. There's an opportunity for us to bounce up here. The technology has shrunk the gap between price and the moving average. So there's an opportunity for another leg higher, whereas materials and energy and financials, healthcare, all might lag behind a little bit. You know, and then you can see utilities and real estate. I think this little strength is maybe temporary, as the jump in bonds is maybe temporary. I think we're still got, like I said, another near-term run or two of strength left before this intermediate run is finally over with. Those near-term runs might not last a full 7 to 12 days. It might only last, you know, 3 or 4 each. But that's kind of something to keep an eye on. You can see staples. I mean, your safe haven areas are still pretty bearish. These are your safe haven areas. They're not showing signs of bullishness quite yet. Even, you know, even that light green shading yellow line is actually a bearish pattern until it turns around. That's a bearish pattern. So it looks like we have an opportunity to make one more bounce here. It probably won't be led higher by energy and materials and financials and industrials this time. It might be led higher this time by technology and these other areas, communication services and discretionary, before we run out of gas, before the intermediate run runs out of gas. All right, which sets us up for our trade idea of the day, and that is a stock like Apple. Big, large cap tech name, has been weak here lately, got to its light pink shading, but not a yellow line, but close. Its intermediate line pulled to its market sentiment line. It's bouncing back up. It's back to dark green shading and a green line today. It's bouncing back up above its 8 and 17-day moving averages. You can see the MACD histograms rolling up. The stochastics is turning up with a phantom green arrow. The 8-day is still above the 17-day despite the weakness. A lot of these indicators here, you can see we got down to negative 100, but not through it. We got down a little bit below 50, but not, it's a bullish drop, kind of pullback type drop. You can see the DMI, also same pattern. The positive index dropped below 25, but not below 20. The negative index dropped up above to 25, but not above 30. So nice little pullback type patterns that it looks like we might be bouncing off of. And how much more does it have to go? Well, probably not a lot, because it looks like we're trying to diverge here on the market sentiment. So I wouldn't anticipate a big move to the upside. And of course, that sets us up for a bullish trade where I don't anticipate a big move, sets us up for a bull put spread. Now, it does have earnings coming out, so we do have to be aware of that. And in my Market Outlook Live, we talked about, I've got two options here. I've got them both up here, actually. I can do a $10 wide spread. I can do a $10 wide spread and keep my risk to 3/4 of normal, but I'm only getting $250. Usually I would try to get $300. So instead of doing the $10 wide spread, I did the $5 wide spread, but did two of them. That allowed me to also keep my risk down to less than $700 in this case, but now get that $300. That's my normal return I shoot for, is $300 and $1,000 of risk. That's normal. But now I get $300 on less risk because I want less risk because of the earnings coming up. Just in case it just blows up against me, the worst case scenarios, I still want to try to only lose $300 at max. But you can't control if it gaps against me for whatever reason. So the most I could lose no matter what is $700, which is less than normal, which is perfect. So we did it. So I'm selling the 125 put at that 30 delta, mid 30s delta, buying the 120 for protection. And like I said, doing two of those instead of just the one $10 wide, doing two $5 wides. And that sets me up for the type of return that I'm getting there. So we put that in, and again, like I said, if we break that 300 mark, if I'm going to lose 300, then the stock has to roll back down below these lows. In fact, there's my break even right there. So it'd have to roll back down below these lows that we're bouncing up off of right now. We'd have to break that support. And there is, a point of control here, but I'm expecting that anticipating that we'll bounce up through there, because we're already above, yesterday's high and the day before that. We've got a higher high, higher low. We closed near the high, so it's a good little bounce. I expect that we'll continue to bounce, probably not a whole lot, but enough to keep us in the money, right? Which is, my short strike's above at 125, so we just have to stay above 125, which is right there. So as long as we stay up in this area, I don't care how far up it goes, as long as it stays above 125. All right, so that wraps us up for today. You've heard from me now. Now I want to hear from you. Use that link popping out in the top right corner of your screen. That takes you to our Market Outlook forums. Open up any new thread there with any questions or comments you have about today's video, and reply to other people's threads, and let's keep this conversation going. As always, thank you very much for watching. Remember to subscribe to our YouTube channel, hit that thumbs up icon on Twitter and Facebook as well, and then comment on our video. Have a great rest of your Wednesday night, everybody. Thanks again for watching, and we'll see you all next time.